Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 29th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. This week we do have the FOMC meeting and the Fed interest rate decision that comes out Wednesday afternoon. That's going to give us another FOMC key level similar to the one we received on May 1st and again on June 19th. These are very important key levels here to watch in the markets, and as the market has awaited that news, we have gone sideways into that meeting. So we're mostly range bound. We have continued to see new highs, but the new highs have been barely beyond the previous high before it rotates back down, barely beyond the previous high it's holding right now. So it's mostly a range bound market with an upward bias. We continue to see the PIMA trigger zone be defended over and over again, but as we continue to notice, that 2960 level is a very important level down here, the previous high here, the key range high, and after all of this sideways action throughout the month, any failure to hold that level, this energy right here would then be released to the downside. But until that level is broken, everything continues to flow to the upside with a bullish bias. So again, we're still in the zone. We may see further range-bound activity ahead of the FOMC meeting later on this week. Once that meeting comes and goes, we could finally see a shakeout of this range and see some actual directional conviction. All right, let's take a look here at the NQ. You'll notice here with the NQ, price continues to hold above the previous highs here, sitting just above these previous highs at 80.20 or so, 8,000 evens. And right now, this market continues to be quite bullish as well, even more so than the ES. You can see a clear uptrending market. Pullbacks continue to be defended for new highs. But again, for the most part, here's the time frame right here for July after the June rally, and we've basically gone mostly sideways with an upward bias. So again, the lower level here, call it 7,800, maybe 7,740 on the low end. That zone becomes a very important zone just in case this thing were to fail. But until that moment occurs, this market continues to trend up. It continues to honor the trigger zone of the PIMAs here. Every pullback has been a buying opportunity. Again, we could have a quiet start to the week as we head into the FOMC meetings later on this week, but once that's come and gone, we could finally see some actionable movement here. Alright, let's take a look at crude oil. You'll notice with crude oil, this one continues to compress. This one has been in a compression mode for on an 8-day developing basis now. We finished 1, 2, 3, 4, 5, 6, 7 days sideways on Friday. Here's 8 days developing now. This market has very, very tight compression at the end of the range, where you can clearly see over the last 4 days it has lower highs, higher lows, and just a very narrow base of range-bound action right here that's happening at the apex of that pattern. And basically that type of behavior suggests that we could see a major breakout very, very soon. Now directionally, it could be either way. We continue to hold above this 55 key level. If price were to drop significantly through 55 and by the end of the day reject it, that could trigger an upside break. If this market were to rally and push through 57s and hold, it could lead to an upside continuation. If there's any failure to hold 55 without a recovery, that opens up 50 to 51 down below. So again, we got to see which way this thing is going. But we had something similar to that happen here, where we compressed for 10 days, got very, very narrow, and then we got the downside break at 55. It failed by the end of the day, and then 13 handles later we were testing 67s. So again, this is very important here to see how it's going to play out. We have very similar price action happening at a very similar level to last time. So again, doesn't mean we have to break to the downside and rally, but watch for those tricks that can happen. Over here we had the same type of behavior where it went very narrow sideways. It had a failed high, and then that failed a second time before we went. So these can play out in many different ways, but 55 is going to continue to be important. This narrow range is very, very important. That compression will lead to the next phase of expansion, so we'll continue to watch it very closely. Lastly, here's gold futures. This one's getting a gap up today, and it's sitting right above the 1430 level. 1430 again has been very, very important. It's been important resistance over the last few days, over the last week of trading, and every time it's tried prices above that zone, it has been rejected back down. This market has remained bullish in the PIMA trigger zone, but also remains range bound after the June rally. So we knew to expect that type of price action. Right here, this type of price action suggests that the trend is still strong, but this market has not been able to find acceptance above 1430. 1430 happens to be the low for today's session, so we'll continue to watch that low. It's building a little bit of a range above that zone. If there's any failure to hold 1430 today, we likely rotate back to a gap fill at Friday's close, which is around 1418s. So we could be looking at a rotation back down if price cannot hold 1430 today. All right, that is it for now. We'll see how this develops heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.